especially given the nature of things they've been in 2024, it segues us nicely into the next one, which is the housing market outlook. And this comes from FastCompany, which is usually more business focused, but this one's about real estate. And this research firm that is making a 2025 home price forecast. Yeah. In summary, the idea here is that it's predicted that U.S. home prices will still rise in 2025 by 4% and again in 2026 by 4%. Now, this is not coming from one of our traditional sources like Altos Research, CoreLogic, but I didn't find any flaw in their rationale.
No, I'm with this 100%. I mean, that's what I used to use always. As a matter of fact, today I was watching Patrick Vince David, and he had a cool little graph. I wish I had my cell here.
We're eventually going to get him to say his name right.
Yeah. And so anyhow, there was a graph right there, and it just stated it was comparing like the stock market, gold, and real estate. Yep. And the downfalls, right? And so it was pretty cool just to see that real estate is pretty resilient.
Pretty stable.
It's pretty stable. It'll just give you that consistency.
Actually, I wouldn't say pretty stable. It's stable because, I mean, you do look at it, like, compared to all the other assets, and I did look at that video, and I'm like, dude, it's ridiculous how people are the most afraid of it, but if you look at it, it's the most stable one throughout the years if you compare it to, to other assets. But I understand personal preferences, and everybody, is comfortable with what they're comfortable with. But I mean, it numbers don't lie.
But it was since 1930, right? That he had that comparison all the way to now.
Which is
we
ridiculous.
Only had a double-digit negative downfall on real estate versus, I believe, on the stock market, it was like 6 times.
Numerous times, yeah.
In the double digits. We're not talking about like 10. We're talking about 19, 20-some%.
It's one of those things where it's like it's insulated from some things and exposed to others, whereas like the general market can be exposed to entire monetary theory or entire overwashing policy. Yeah. And real estate can be more specifically altered by policy or theory, right? There's that. And then, but again, I think, when you look at the collapse of 2008, 2009, you're talking about that being entrenched in the overarching financial problem. So it was, I'm not going to say it was a victim of it, but it was definitely along for the ride, along with the insurance companies, along with the insolvency of the banks, along with the reinsurers and all that kind of stuff. There was cataclysmic problems that real estate was a part of. And most people would, I say at this point, probably say was one of the catalysts of too, which I 100% agree with that.
Oh, totally.
I wanted to bring up to you guys that, it's possible, because again, most people don't watch or cover this regularly like we do. Yeah. It's possible that this estimation of 4% in 25 and 4% in 26 being called moderate and modest growth could be overlooked by the years that preceded that, which were rampant and out of control growth. So I want to remind everybody that while you may look at 4% and go, oh, that doesn't seem like it's a lot, and then 4%, it doesn't seem like a lot. Well, in 2020 and 2021, it was 12, 18, 30, 40%. In some parts of the country, their appreciation went up by double digits year over year over year, and now it's moderating back to 4%. Some of those places, honestly, could even suffer a dip and still be up by multiple double digits over the span of a 5-year look back. Yeah. So don't have short-term memory. That's my point. Sorry.
No, well, and here it is, guys. This is talking about nationwide.
Yes.
Right. Parts of cities, they're different than this. They're not even in the 4%. If you look at like our East Lake area, it's more like 8-10%. Yeah. And then now you're talking about with your average, the median sales price of a home right now, I believe it was like $426.
It's still right around that 420, 425 area.
So 4% on something like that, just to be modest, isn't a bad deal. It's especially with compounding interest, right? Something that Albert Einstein came up with. So
seventh one.
Compounding equity growth. Yeah, absolutely.
So, I mean, I believe it, just invest. Going back to the stock market and all that, I don't want to say that I didn't want to sound like real estate's better than the stock market. For me, I like real estate. It's always good to diverse yourself. I have,
you got money in the market. I got money in the market.
We all do, right? So it's just, I think the majority of people are more comfortable investing in real estate and just knowing, hey, that's my comfort level there.
Yeah, I know as you've experienced with the rentals you have, it's like people live there. They're working to live. They're surviving. It's shelter. It's not just it's not a little stock certificate that exists in a folder or in just some digital space in an online wallet. It's a place where someone's living and inhabiting.
And I think that's the difference, where it's like it's more tangible. You can actually show up. It's there. Like it's real. So it's like when it's stocks, it's like, dude, one day from another you can wake up and.
It's like it's just the question to me ultimately just becomes: are you willing to endure what comes with it?
Yeah.
If you're willing to endure what comes with it, then real estate can be a very healthy investment category for you, because what comes with it is going to be tenants, landlord, issues at the property, issues with whatever. And then, but that's not unlike a lot of other things.
Yeah.
You can have issues of whether you're collecting art or you're collecting, collectible baseball cards, or you're doing whatever else. I mean, I'm trying to think of something else on the top of my head. Yeah. But anyways, the point I'm saying is that, you're going to just get what comes along with it. Mm-hmm. And I agree. I think you're going to see modest modest growth in 2025-26, and real estate overall, long term, is still a very safe investment.
Yeah, exactly. Yep. It's right now lack of inventory, right? It boils down to that. So price declines. Honestly, it's unlikely. For the next year or so.
I don't know where they're going to come from, because again, I'm going to go back to the migratory comment from a little bit ago. It's like people have migrated to these places, and if those places have price declines without a vacancy of population, then the price decline will be moderate as well, because there would only be a collapse of prices if you also have a void of people living there, and that population just disintegrates as well.
Oh, absolutely.
I think, all the drones that are popping up in these cities are going to cause a lot of people to leave and, sell their houses. So just, put a pin on that one.
You think
my conspiracy.
How many applications are you going to take this month for people's reason for moving is going to be drone activity in my area? I don't know,
but I just dropped ads in New Jersey.
Oh my God. Okay, but that does speak to life events. I'm not going to joke about that part, but one of the references is that life events gets overlooked, and we've been saying this. Yeah. This is, again, I'm just going to put a little feather in our cap, because we've been saying that all these forecasts may say this, that, the other thing, but a lot of times they overlook life events, birth, death, expansion of family, contraction of a family, work change, life change, whatever it is. Those things are built in they're part of that number too, but they often don't get talked about. And they're very much a subset and a base set of normal year after year activity that's just happening because it's happening.
Exactly.
Well, that could rule a lot of things that have nothing to do with finances. Like, now you have to move, you lost your job. It's like, oh crap.
Well,
money doesn't matter. I gotta
I mean, it's certainly it's like it's like if you had one of those what do you call it? What ways? A scale. If you had a scale and you're putting marbles on it, and 50 of those 100 marbles are life events, and you take all those 50 off, that makes a big change. Yeah. So the life events being part of all these calculations but getting overlooked is why I kind of devoutly hold that position I have a lot of times about where we are with inventory and money and all that. It's just because there's always some of that baked in.
Yeah, I mean, there's always these situations. I mean, as a matter of fact, it just brought me to a story I'd like to talk about yesterday, an actual situation, because this person wants to build a couple ADUs on a property she bought 5 years ago, right? And so after doing the math and doing everything, she was stationed in D.C. here, then she got stationed in D.C., just retired, and the math wasn't mathing, on building the ADUs. And so she's just been very emotionally attached to this property. I want to build an ADU. She currently has it as a Airbnb, and I suggested, well, why don't you put a pickleball? There's enough. Instead of doing the ADU, put a pickleball, little court in there. Excuse me. And then, put a cornhole, and that'll help you increase the traction for your Airbnb, attracting more people, and probably even, getting it rented for a higher price. Or I said, since it was you lived in there 2 years out of the 5, and let's just say you didn't, but you got PCS orders to DC, their capital gains isn't there for you. And so, if you need to fly from DC to San Diego, that could be costly, right? A lot of times as an investor, I like to see my property and know that I can drive to it, etc. Yeah. Maybe you just want to sell it, and then that'll free up your VA, and she doesn't own a home in DC because this one took most of it, right? Mm-hmm. So I just simply said, what if you just sold it? Yeah. Well, she's all like, but I got a low rate. Well, I understand that, but now you have this X amount of cash, is like 200 some plus thousand that you'll have. You can go 100% financing for a unit, allow them, your tenants to pay for that. And now you have something that you can do right there, and possibly now invest your money into something else.
That's really smart, dude.
And, she was just like, now she's thinking about that. And so those are the things, because a lot of times we hoard real estate, right? Yeah. We're hoarding it because we get so emotionally attached to the interest rate, what it has. So it just we put the blindfolds on, not really realizing there's a bigger picture.
So I think those are two, those could be two parts of the same coin, is that you hoard it in one hand and then you underutilize it. If you have the place and the space to utilize, I was at a property on the west side the other day, and I was just kind of walking around. And a new friend of mine, and he has an event space, and he does some Airbnb, and he's like, "Oh yeah," and then I'm gonna do this with this. And do that. I'm like, "Oh my gosh, what a great use of that space!" But I'm like, "How did you find this place?" And he said, "It's been sitting here unused for years." And I was like, okay,
got it.
So the underutilization can actually cost you money. Does he have to sacrifice some way of life because he's sharing some of the back space? It's nearly a 1/4 acre lot. Jeez. And he has a main house that he built out, converted the garage. It's Airbnb. There's a space to live in the back with room for an ADU. And still, there's activity areas and all sorts. I'm like, okay, so there's this guy has a vision. It was underutilized. It's coming into utilization, which then is going to be a revenue maker.
Yeah. I mean, I forgot to mention there's a $2,500 deficit.
What $2,500 deficit? What do you
monthly?
Mean? Oh,
so monthly out of pocket from her because of the Airbnb. And so I'm like,
so she's losing on it.
Exactly.
Oh,
you know what I mean? So
no bueno.
Not good.
Okay.
Not good. Always look at your numbers. Always. Everything's about identifying your best exit strategy, you know? So an investment that's not paying on its own is just not considered
that's not
a good one.
Yeah, that's
and she's emotionally attached
a loser.
to the ring.
Exactly.
Oh, man. Rough.
And that's because you're trying, new things. You're trying to Airbnb. You're trying to now seeing things are changing. Things change so quick right now.
Yeah.
Excuse me. You have to learn to adjust. You have to become a chameleon and just go out there and adjust.
Yeah.
That's why I suggested, hey, put pickleball, put
do something.
cornhole, do something with it where it's just going to attract more people. So,
wow. Okay. Well, that's a good share right there, Memo.